Hello, everybody. Welcome to Wednesday. The S&P 500 was up 0.6% today. And there were a couple of big things that happened that I think are important. First of all, the Treasury yields have really kind of solidified and they're not jumping up as much as they were. At around 1.5% on a 10-year Treasury, that's one of the best 10-year Treasuries of any government around the world, especially for one with the stability and size of the US. Japan, for example, their 10-year Treasury is at 0.12%. And so about 40% of our treasury bonds are foreign owned. And so when it gets to that level, it seems to be holding its own. And so people are buying and kind of keeping that yield from going up a lot. The market definitely likes that. We had the stimulus package pass the House today. I think this is going to be a big deal. I think ultimately this is going to be a big boon to the economy, especially to the kind of the economically sensitive stocks that we've gotten invested in. And then for the last 8 days now, out of those 8 days, we've had 2 days where growth stocks did well, very, very well, last Monday and yesterday. But no follow through in both times. There was nothing happening the next day, which to me shows that it was basically a short covering rally. Some people come in to do some bargain shopping, and all of a sudden, all the people that have shorts have to buy back, and it creates this bigger jump, but it doesn't hold through to the next day. And 6 out of the last 8 days, value has won over growth, including today, did really well. So we went ahead and got rid of our two inverse positions on the stock market side in our portfolio. We bought some other pieces, some pure value pieces on the traditional models and some other ESG pieces on the ESG model. So all of which did quite well today in the end, even after we bought them, which is great. I'm happy to see that. And I just think with the stimulus coming out and all the, the stability that's now happening within the Treasury market, it's time to let those go for the moment, and we'll see what happens here. But things are looking very good. I think we're on the right side. I'm really excited about owning stocks that are fairly inexpensive comparison to their, earnings. I love clean energy, innovative technology, artificial intelligence. I love all of those things. I think they're really fascinating. I think they're the future. But last year they got pushed up so high, that they're selling at much higher, multiples times their earnings. And that was always a bit of a concern to me. And I'm really excited to get into these kind of value stocks where they're, have a lot of room for growth. If the economy does continue to pick up, if the virus continues to get, under control, if the stimulus package comes out and all of these other things that they're doing, that should be very, very good for these, types of stocks. They're also less sensitive to these interest rate increases. They're considered economically sensitive stocks. And so usually when the economy is going up a lot, that's what creates inflation. Well, these types of stocks generally like that scenario. So, we'll see how this plays out altogether, but really excited about what happened today and look forward to talking to you tomorrow. Thank you.